Now that you understand what swing trading is, let's talk about the market that we're actually trading. Before you can confidently place a trade, you need to understand what we're actually buying, what move is price, and how to calculate the potential profit or loss. So what is Forex? Well, Forex stands for the foreign exchange, right? It's the foreign exchange market. Every time one currency changes value against another, that's Forex. Instead of buying stocks like Tesla or Apple, instead we are comparing the value of currencies against each other. So a few examples that are super popular is Euro USD, that is the euro in the US dollar, GBP USD, that is the Great British Pound in the US dollar, and USD JPY, my personal favorite, that is the US dollar in the Japanese yen. So for example, the euro. With Euro USD, you are comparing the euro against the US dollar. So understanding currency pairs. Every currency pair has a base currency and a quote currency. Your base currency will always be first. So for example, in Euro USD, your base currency is the euro and your quote currency is the dollar, right? So how do you make money? Okay, we'll keep it very simple. If you believe that the euro is gonna increase against the US dollar, then you want to buy Euro USD. The reason you're buying USD is because you believe the euro is going to increase in value. That means Euro USD, the currency, should also increase in value. Whatever the euro is doing, that is kind of where we're following. If you believe the euro is going to be weaker than the US dollar, then that is when you want to sell Euro USD, because we believe that the value of the euro will decrease. Therefore, we will make a profit with selling Euro USD. And that's pretty much all trading really is. You're just predicting the currency strength against the other. So why does price move in the first place? What is causing price to move? Well, it doesn't move on its own, right? There's a lot of factors that come into play. So a couple examples of what moves price. You have interest rates, inflation, economic reports, economic news, and even political news can play a part in what moves our currencies. You do not have to be an economist. However, understanding those factors of why price move is very important and can help you in your trading. Let's talk about our major currency pairs and what makes them so important. Well, these are the most traded currency pairs of all, right? And they all have some kind of relation to the US dollar. Let me give you some examples, right? So our 7 major currency pairs, we have Euro USD, that is the euro with the US dollar. We explained that before. We have GBP USD, that is the Great British Pound against the US dollar. We have USD JPY, that is US dollar paired against the Japanese yen. We have AUD USD, that is the Australian dollar paired against the US dollar. We have USD CAD, that is the US dollar paired against the Canadian dollar. We have NZD USD, that is the New Zealand dollar paired against the US dollar. And we have USD CHF, that is the US dollar paired against the Swiss franc. So those are all of our major pairs, but we also have cross pairs, also known as minor pairs. These are going to be any pairs that don't have the US dollar paired with it. So a few examples that I actually trade myself. We have Euro JPY, that is the euro paired against the Japanese yen. We have GBP AUD, that is the Great British Pound paired with the Australian dollar. And then we have AUD JPY, and that is the Australian dollar paired with the JPY. And those are just my personal favorites. There are so many different minor pairs and cross pairs that you can find. Okay, so let's talk about what is a pip. Let me show you a chart real quick. So I just switched to a chart. This is Euro USD. We're not going to talk too much about it. I just want to kind of explain what are pips. So price moves up and down, right? You can see right here, if I show a line chart, you can see price, we move up, we move down, right? We move up, we move down. Anytime price moves up or down, you are moving in pips. The market moves in pips. That is the increment that we count our moves in. So if I was to measure this move from here to here, using this tool, we see that price moved about 582 pips if you look right here. Here is another example of USD JPY. Again, if we measure from this move to this move to the top, we see right here, price moved 1,000 pips, right? So pips is just how we measure how much the market has moved in the time. So we talked about it on the chart, but I just want to make sure you guys really understand. So just another example is like, let's look at GBP JPY, right? One of my favorite pairs. Imagine price is currently sitting at 199.50, right? and then price moves to 200.50. That would be a 100 pip move. And just to be clear, the more pips that move in your direction, the more money you're gonna make. The more pips that move away from your direction that you're trading, the more money you're going to lose. You don't need to memorize decimal places. You don't need to memorize how to calculate this. The trading platforms are going to do it for you, right? It's going to be calculated for you. You just need to understand how it moves and the unit of measurement that it moves in. So what are lot sizes? A lot of people get very confused on what a lot size is, and they overcomplicate it, and I'm here to make it super simple. Think of a lot size as just how big of a position you want to open, right? The bigger the lot size, the more money you can potentially make. However, it also means the more money you can potentially lose. Let's look at an example of a few lot sizes. So you have a micro lot, you have mini lots, and you have the standard lots. I'm going to give you an example of how much you can potentially make with the same exact pip movement. Let's say a trade moves up 50 pips and you use the smallest lot size, a 0.01 lot size. That's your micro lot, right? If the trade moved 50 pips, you would have made $5 from that move. Now let's say you want to bump it up, right? And you use a mini lot. If you use a 0.10 lot size, that is a mini lot, and the trade moved the same 50 pips, this time you would make $50, right? The trade is still moved the same exact amount, right? Nothing has changed there, but you just increased your lot size, which allows you to make more money there. Now let's say the trade, again, move 50 pips, but instead you use a standard lot. This is your 1.00. Well, on that trade, you would have made $500. Do you see how it correlates, right? The more you risk on your trade, the more you increase your lot size, the more you can make. But remember, if the trade was going against you, you would be negative $5 or negative $50 or negative $500. Right? So keep that in mind. Remember, the market moved the exact same distance. The only thing that changed was your lot size. This is why choosing the correct lot size is super important. And we're going to talk about risk management really soon in this course. What is leverage? Leverage allows you to control a bigger amount than what you actually have in your account. Leverage is a tool. It can amplify your profits, but it can also amplify your losses as well. Just because your broker offers high leverage does not mean you should use it. Let's talk about the market sessions, right? So there are 4 sessions, right? We have the Sydney session and we have the Tokyo session. A lot of people tend to combine that session and call it the Asian session. So let's just say that we have the Asian session, right? But that's going to be the Sydney and Tokyo combined. We have the London session, and we have the New York session. Since I am a swing trader, I don't need to be in front of the charts during every single session. I usually analyze my charts whenever the daily candle has closed, and then I monitor my charts throughout the days instead of watching every single price movement. So why is swing trading different? One of the biggest advantages of swing trading is that you do not have to sit at your computer all day. You do not have to watch every single price movement, be in every single session. You analyze, you plan, you execute, and then you wait. You let the market do the work for you, and that is swing trading. Freedom is one of the main reasons why I chose swing trading. Now that you understand the Forex market, you're ready to start marking up your charts. Next, we're gonna jump to TradingView, and I'm gonna show you how I mark up my charts before I show you my break and retest plus fib strategy. So stay tuned.